Hi everyone, I'm Calmejane. I'm a C-level executive in technology, and for more than 15 years I've worked in traditional finance, in banks, operated payment systems and digital asset business. I was delighted to attend the XRPL training where we learned a lot. Today the class began with an introduction to the XRPL system, explaining its decentralized nature, fast transaction times and low carbon footprint. Participants learn how XRPL can be used for payment, tokenization, NFT and other real-world applications. Key concepts like blockchain, structure, consensus mechanism and the role of XRP as a native asset were covered. We also explored how companies use the XRPL decentralized exchange for trading assets with built-in liquidity, fast speeds and no middlemen. In the hands-on exercise, we dove into XRPL. We connected the XRPL test network, created wallets for an issuer and a receiver, and explored how key functions like creating tokens and setting up automated market maker, a liquidity pool. By the end of the session, participants had a strong understanding of both the theory and practice behind interacting with the XRP Ledger, from token creation to advanced payment capabilities, all in a real-world blockchain environment. This combination of learning and coding was designed to give everyone a practical feel of working with XRPL technology. On the second day, we look at the difference between traditional accounting and the blockchain. In traditional accounting, every transaction, whether it's a payment, a purchase, or the creation of a new account, requires specific journal entries. Each entry involves debits and credits to ensure the ledger remains balanced. Blockchain systems like the hooks were used here, following the similar logic. Hooks like automated accounting and rules that trigger when certain conditions are met. For instance, when a transaction occurs, the hooks checks whether the transaction type is valid, manage the status of the balance, and updates or rejects the transaction based on predefined rules. Just like accounting software, automated entries, blockchain hooks and the transaction logic validate accounts and balance and ensure the system remains consistent. If an issue arises, hooks can roll back the transaction, much like reversing an incorrect journal entry in accounting. In the practical exercise, we had the opportunity to practice how a hook system is working, where the code manages affiliate accounts and their balances. When an invoked transaction occurs, the hook creates a new affiliate by linking a user account to a unique code. In accounting terms, this is like adding a new client or vendor to your system. Next, when a payment transaction happens, the hook checks if the code associated with the transaction exists and whether the balance is valid. If everything checks out, the book updates the balance. If the code or balance doesn't exist, the hook rolls back the transaction, much like how a rejected payment or invoice is corrected in traditional accounting. By automating these steps, blockchain hooks act like smart contracts that mirror the debit-credit logic of accounting systems. They ensure secure, reliable transactions and prevent errors by rejecting or rolling back invalid operations. In summary, blockchain hooks function similarly to automated accounting. Entries validating, processing and adjusting transactions while maintaining ledger consistency. It was great to discover that and acquire this knowledge across the workshops, and we are now able to handle blockchain-based financial transactions just like a seasoned accountant. Or maybe a bit, maybe we still have a road to go. Thank you.